Ladies and gentlemen, we got a trend that is starting to form here. The late guy, the man that's known for being late, is on time to the second. Okay, Roy extra early, bright and early in the morning, but Tevis is nowhere to be seen. He's not even in the backstage. I can't pull him up. He's just not here. So, yeah. Anyway, happy Friday, fellow SoFi investors. B-dubs talking to me all the way from a chat that is not even like the person that's monitoring that chat's not even there. It's crazy. But no, I'm just kidding. Roy, how are you, my friend?
Good. Productive week. How about you?
I haven't seen you in forever.
Yeah, since like almost a little over 24 hours. Yeah, it's crazy.
Not even that. I mean, we like after our live stream, I think we talked longer after the live stream than the actual live stream itself.
We did. Like half of that should have just been on the live stream, to be honest,
Yeah.
and the other half not so much. But yeah. Yeah, good times. Fun week, as always.
Oh, okay.
There he is.
How's it going, Tevis?
What do you mean there he is? I literally just told you guys backstage I'm restarting my computer.
Did you?
Late as always.
Oh my God. F both of you.
Jeez. All right.
Don't jeez me. You sent out the link at like 8:30 p.m.
I got the link the same time you did.
I know. You made it late.
Yeah. It was like 9 something, but
yeah.
I'm busy, okay? I'm conversations with Vlad and I literally couldn't think of a second name.
With Vlad and also Vlad name dropping.
Yeah.
I'm sure you could. You're just not ready to announce it yet.
Future names, yeah, but not names that I've actually talked to yet. But Tanner always wants to do a short stream. What? Not true at all. We're going to go 3 hours today, especially if Steve ends up joining. He wants to do a 24-hour stream talking about his favorite companies like PayPal and SoFi, which I think he's so frustrated with these positions. But yeah.
Hey, we closed at $7 today. That's a big deal.
Is Martin in the chat? Is that the Martin? Can you check and throw him up here if that is the Martin?
The Martin. Yeah,
I think it is.
I think that's him. If he wants to join, he can text me.
All right. Martin, text him. The Martin himself. It's saying is him. I'm pretty sure that's his dark green logo, if I remember correctly. Tanner and Tevis always beefing lately? Nah, man. Okay, let's jump into some news. Did you guys see my Fintech Frenzy earlier today? Dude, I hated that.
No.
I instantly hated that. I showed off a ton of new Galileo clients that were announced due to the new Portuguese website.
Seriously?
Yeah.
Okay.
Yeah, I went through the list. I found like 15 new names.
Okay, well that's good. I mean, it's always good to see Galileo expanding, and what's happening, of course, is this partnership that's international, reaching across to Brazil, former Portuguese colony, but not too optimistic on it. I mean, it's nice, but we know who dominates that market.
Yeah.
Does Tevis know? Tevis knows.
I do know.
Tevis, are you ever going to buy that company?
Yeah, I think so. One day probably soon. I just when the market peaks, I'm gonna buy all of your stocks so that they all go down. Roy asked me to buy a little bit of Palantir today because he was scared he had to like exercise his
one share.
he was hitting the price where he had to roll, and he was like, Tevis, please buy it so it goes down. But yeah, I'll buy some Nubank. Why not? But I asked you guys this on Twitter this week. I said, I'm doing my friend's portfolio. And yeah, I mean, Rocket Lab, Nubank, Duolingo / Hims, all the fan favorites. I'll just put a little bit in all of them. And then I'll be a part of all the conversations.
Whoa. You missed one.
Palantir.
Palantir. This man said, hey, friend's portfolio, you guys pick. And I thought about not telling him Palantir. I'm like, you know what? Palantir. So I asked him today. This was 2 days ago, I believe.
You must be a really, really good friend, Mofo, because if I'm going to buy Palantir at, what is it, $32?
Okay.
Underpriced.
If you had bought it when I said, yep, it's Palantir, you'd already be up like 7%, 6%, something like that. So, I mean, like, I was like, hey, have you bought it yet? And you're like, nah.
Dude, with the swing that happened on that Monday, like, it fell to 20 and now it's like 32. It's like a 50% move in like 2 weeks. Insane.
Well, speaking of stocks that swung, Robinhood, what price did I say you should get in at that?
Yeah, like $14.50 or something.
Do you know what it closed today, Tevis?
No.
Tanner,
I don't know actually.
$20.
Oh wow.
So
upgrade after upgrade, and maybe we'll talk about this after hours. There's a realistic chance that they post 50% gains year over year in Q3. Like it's more likely that they hit 50% than under 40%. Dramatically more. It's ridiculous with those June numbers. I didn't realize it. And then Tanner, during the FinTech frenzy, you like, hey, Robinhood numbers. I'm like, okay, these are really good. Better than I expected. Crunch the numbers. And I'm like, I got to get some more next week. $20, don't care. And I know it's not a permanent forever position, but yeah.
The options numbers were like scary good. Like they were really good. Weirdly.
Really well lately. Rocket Lab. It was up like 18% today.
Yeah.
It was up yesterday as well. Like it's been a really, really good week for them too. So Matt's making all the monies as well.
I mean, it's been a good week for markets anyway. SoFi was a little sluggish, just a little bit under 6%, but we hit 7, and I've been buying more SoFi. Just I know that when rate cuts come, it's stupid. Like it does impact the company, but it's going to impact the stock a lot more, I think. So I'm adding a little bit more here and there, but yeah.
I'm a little bit worried that the Tevis friend portfolio is just going to outperform Tevis's portfolio.
He'll have Palantir in it, so it's guaranteed.
I mean, that's the point, bro. My picks are shit. My friends' picks are winning. I'm going to get into their picks so that either they're losing with me or I'm winning with them, whichever one of those two things happens.
I never believed in any of those, like, psychological things. Like, whenever someone buys, this is going to happen, until I saw Data-Driven Investing post the tops of SoFi stock like 7 times in a row.
All right. So last week, the reason why I wasn't here, there's a retreat at work that I organized and went on and everything. So like really spotty internet and everything. But ended up like during that time, I had sold $30 covered calls on Palantir. And so I when I had moments, I'd be like, hey, Tevis, buy a share, please. You know what happens when you buy a share? He didn't do it. And then Chris Hager, I messaged him and I was like, hey, need you to post a screenshot on Palantir so it does not break. I don't think he did it either. He must have gotten busy or something. So I'm like, okay, I'm just going to have to freaking roll my covered calls. So thankfully this week, it didn't happen again. But like, I'm getting sick of these 52 week highs again and again. Nubank too. It's like, just like, stop it already. Like, go down so I can buy some more.
Yeah, dude. I don't know. Maybe some of these short
people, man, you guys are so fucking annoying.
Some of these short report companies honestly could pay you a lot of money. I'd reach out to them. They could use you like an asset to, you're like a long for their portfolio.
Stronger than the timer effect, I tell you. You almost caused a market crash in the NASDAQ. timed it like within 1 day of the all-time high, and then the Amazon as well. Like, dude, what companies do we hate? Get this man to buy some more. Put that in your friend portfolio.
I saw like people. It's funny though because it's like it's a joke across people that like just are viewers of the SoFi Weekly. I was reading through my comments on just a bootleg that we did, and one of the people commented, "Now all we need is for Tevis to sell SoFi. He's our Jim Cramer, or he's our Kathy Wood." It's like, dude, fuck off. I'm not selling SoFi just so I can go up for you guys.
He's our Kathy Wood. That's awesome, dude. What's it called? But Nubank, I saw some heat this week. People were telling me to be quiet, stop talking about this company, even though it's been on quite the streak of hitting all-time highs over and over and over again. Is this when you're going to be buying in, Tevis? $14?
I guess.
It's tough.
Or are you going to wait for it to like drop below $65 billion? Get it cheap.
You tell me, man.
No, I think I'm not buying it at this price, but
But you can.
well, honestly, I think it's a weird thing, right? It's like, is there still people that should buy Meta at this price? I mean, sure. But are there some people that have built out positions that do not buy at this price? Also true. And yeah. Is this new weekly? The problem is that SoFi just hasn't had a lot of news. But we don't want to dictate this show based on, just news, right? So I kind of wanted to do tonight's show a little bit differently in talking about we're kind of wrapping up the earnings season for the fintech companies that I cover, and it's been a slamming success across the board. Like, I don't think a single company that I cover has missed, even going out externally, like looking at Adyen or Marqeta or Toast. Like, these companies hit, like they did well. The only one that I was a little bit not even disappointed, it had great earnings, it's just not as exciting, was Block. Block wasn't as exciting as the likes of Nubank or SoFi or Robinhood. These ones absolutely killed it. PayPal killed it. So, Roy, you want me to share that?
Yeah. This is one somewhat related piece of SoFi news. I think everybody here knows that I hate really two things in life: Zelle and Canada, not Canadians. And probably Zelle was invented in Canada. I don't know. I know it wasn't, but it feels like it. But this is a piece of news that came out, not just from Robinhood Snacks, by the way. I love that they have that. And it's actually pretty interesting to read. But there's a big probe on Zelle right now because there's a lot of fraud that's happening. This happens with a lot of different payment platforms. Let me pull it up just a little bit. When they gain in popularity, like inevitably there's going to be scammers, no matter how secure or anything. The question is that regulators have is whether they're actually shutting things down fast enough. And so this Consumer Financial Protection Bureau is currently investigating the partner banks. And this also, relates to what I was trying to do a transaction to help my son purchase a used vehicle at a used car lot a couple of weeks ago. They accepted Zelle, and I found out that SoFi had $1,000 limit per day. And, Anthony actually responded on that. And he said, yeah, it's going to be raised, later on down the road, and didn't elaborate too much on it. But one of the ideas behind that was like, hey, this is a new integration and they want to make sure it goes well. And there is a good bit of fraud. Like, not everybody's used to this product. So this notice caution with Zelle. I think, this shows that like, hey, maybe some of that's warranted because I had a lot of backlash on that. That said like, oh, SoFi is garbage because they give you $1,000 limit. Bank of America gives you this and Chase gives you that. And we also saw, a couple of weeks ago with that scare from the yen carry trade and what happened with the markets, a lot of recession fears as well. I mean, Noto is not, he's being conservative. He's being careful. But it gives me confidence as an investor that, hey, this company is not going to blow itself up. It's not going to do something that damages itself long term. I mean, not everything is perfect with SoFi, but I just thought that was a neat little find, and I'm like, it makes sense why they're being a little bit cautious with this now.
Yeah, sorry, I had my stream named Fintech Frenzy. Thank you to Shawarma Nation for pointing that out. Yeah, no, they're going slow. I don't know why you have this super hate for Zelle. They hit some speed bumps, but you are the only person that hates Zelle that I know.
It's worked. I probably used it like 12 times, and one time out of 12 across 2 different banks has it worked the way it's supposed to. And I was just pleasantly surprised. I'm like, hey, it's sent. It was received immediately. There were no issues, no errors. And that was with SoFi integration, by the way. I've used it twice with SoFi. So it just, I don't know, for whatever reason, maybe Wells Fargo were just idiots when they were first integrating it. And that could be, because I do also, Nolan pointed this out, but I do hate me some Wells Fargo too. So
that's
also
a common one. I've heard that.
Maybe not. But no, it just, so like, that's the thing is with a lot of these products too, is if somebody has a bad experience, a really bad experience, and I almost lost purchasing this house that I'm in because Zelle screwed up so many times. And it was the only way that they would accept payments that would be that fast. And it was terrible. But when you have like a debacle like that, if we lost a house, I would I don't know what I'd do with Zelle. I'd try to get Tevis, I guess, to buy some Zelle just to tank the stock. It's not a stock, but like somehow destroy it. I don't even know how that would work. But if somebody has a bad experience with Robinhood, a couple of bad experiences, or SoFi, a lot of times for that customer, they're not willing to try it again, a 10th time after being failed. And so for myself with Zelle, it did work once correctly and it was awesome. The rest of the time, it was between really delayed and slow, or incredibly frustrating, or almost losing a house. Like it's my last choice of any payment method. I would rather, mail cash in an envelope and risk that being stolen than use freaking Zelle. It's terrible to me.
Yeah, I was gonna say, do you think that's the average?
No,
the average user experience.
No, of course not. It just, I don't know what it is, but I've had that experience. One of my sons have had that experience as well. So incredibly frustrating.
So Citigroup, really quickly, just on SoFi while we're here on the SoFi Weekly, they increased their ownership in SoFi this quarter. Some people are now pointing to some accusations that maybe this is a bet because they have a Technisys partnership. Do you guys think that holds any weight, or is this just one of the many funds that have added shares this quarter, and they also might happen to be separately the next new client of Technisys and Galileo?
I mean, I think that there's a good chance that they're a partner, but I don't think that that's why they added. There's a lot of people that are adding and buying. So
wouldn't that be like material non-public information if they add knowing a deal is about to be announced, or like if they already know that, hey, Citi's going to sign with SoFi and they're buying on that news and that's not public yet? Isn't that a conflict?
I think they'll just do what Nancy Pelosi does and say it was her husband's buys. So Citigroup will just say, hey, someone else did it, not us. I mean, it might fall under that, but they're not going to say that's why they did it.
Yeah, I mean, we've seen buys from, other than ARK Invest, who sold, I think 9 out of the top 10 had added to their position over the Q2. So institutions are slowly accumulating every single quarter into this name, and institutional holding is at a record. So I'm not looking past that.
I'm using an accelerated Tanner and inverse Tevis algo, and I'm banking. Tevis is dehydrated from energy drinks. What are you focusing on in the markets, Tevis?
I haven't been
this week.
Yeah, I haven't been paying attention. I didn't buy anything this week. Yeah, some weeks I'm more like, I didn't make any content this week. I didn't buy any stocks this week. I've just been focusing on the work stuff.
Yeah. And what's your salary there?
I'll tell you offline. I'm pretty
Okay.
sure you already know or have an
Yeah,
idea.
I've got a good guess. Anyway, I just wanted to catch you off. No, I don't
Roy,
remember where I was going to go with that.
Roy's
Connor's
boyfriend.
very angry today. I'm not angry. I'm having actually a blast.
My favorite CEO of the week is, by the way, in the chat, Glenn Kelman.
Where?
Do you know about Glenn Kelman?
Yeah, he knows. He knows. We talked about this. I can't remember when.
Yeah.
I think one of the fintech frenzies. I like brought him up or something.
It's
Go ahead. Is that the Redfin guy?
yeah. Some context for folks. And we did this on Bootleg Weekly, so you can look up and see Tevis's reaction to it. There's actually an audio clip as well, but basically, things are really bad in the mortgage business, and they're desperate for a rate cut when they're like, "Hey, we've diversified, we're stronger and more resilient. We're just waiting on rate cuts, and we'll be good." And then they're pushed by analysts again and again, like the Redfin CEO, and they say, "Hey, what's Plan B?" And Plan B to him is they will drink their own urine and their competitors' blood, but urine first. Oh man, I wish I didn't say that. That's just love it.
I'm sure it sounded better in his head, and it just came out wrong.
There's wartime CEO, and then there's this guy that's a whole nother level.
Just a psycho CEO. Just a maniac CEO. It's the new style.
I will say, and maybe this was the intent, I looked at Redfin, not really as an investment, just to see what it was doing, what it was at, looked at some numbers. Yeah, it's pretty bleak, but I had not even thought of Redfin in years. So, yeah.
I mean, what's it called? I think I just saw, what was it? Evan from Stock Market News post about mortgage refinancing hitting some not highs, but finally reaccelerating in the past couple of weeks. Could be good for Redfin if there is starting to get rate cuts back in, makes housing more affordable. Maybe good for them, but maybe good for the lenders as well. SoFi might benefit from that product there, and yeah, who knows? Mohammed says he's got to buy Redfin now.
I was tempted, but I looked at the company itself, and I'm like, I'm good with SoFi. Thank you very much. So,
yeah. What other news? Oh, do you want to talk about the PayPal Apple news?
Yeah, I think we've covered SoFi, all the news from this week, the myriad.
Yeah. PayPal, I should start. Apple just recently announced that they're opening up their NFC technology to be used by all third-party apps that want to use that API. So that's going to allow companies like PayPal or Venmo or Cash App the ability to use their digital wallets and do tap to pay directly through an iPhone. Some people are getting excited about this. Some people are saying it's a nothing burger. Tevis, you're a product guy. What do you think about these large changes? Is this good news for third parties or nothing really at all? And by the way, it's not just payment apps. It's also all NFC technology. So it could be car keys, loyalty cards, anything really.
I think it's good because it's consolidation into one device, but it's also way more bullish for Apple because it's consolidation into Apple devices. It's good for PayPal and it's good for all services that are going to leverage the Apple ecosystem. But I think Apple is ultimately going to be the winner here, simply because you're going to have more of a dependence on your Apple device than you had before, because now it has so much more function for you than it did before. So
I think that's fair. Yeah. Yeah, I guess they don't necessarily want to win as much in payments as they do in just iPhone dependency.
I could be wrong, but I think this came as a result of basically a regulatory thing, right? They were forced to do this, which is ironic because I think it just digs Apple's moat even deeper. Because they are one of the only like 2 or 3 hardware players out there, only realistic options. And so everybody in the Apple ecosystem that was using an Apple device now has all their like, I can use my key fob and my car keys, and I can use all my payment provider third parties and all that stuff on my iPhone. It's like, well, guess what? My iPhone is that much more important to me because I don't need all this extra stuff around. And so you just consolidate into one device.
Roy?
I mean, yeah, Apple's going to be making money off of this. The walled garden has lowered their walls just a little bit, and it was pushed by regulators. But the surprise was that this is globally, not just in the EU, which they had complied with previously. So yeah, it's good for a lot of players. It's really good for consumers too, just because we can actually. I don't use an iPhone because it's too Canadian for me. But no, I'm just kidding. But you can actually have rewards if you like doing that sort of thing to pay with, and a lot of people do like that experience. You can get something back for it, which is great.
Yeah. No, I think that it's super positive for both sides. Not allowing the ability for third-party companies to use this part of the hardware device is absolutely crappy for PayPal, and it does create a moat around Apple's in-house products, but maybe that is sort of pigeonholing them to a much smaller audience than letting an ecosystem build products within that sort of marketplace, right? That's how the App Store and all of these things became so successful, was letting developers create a business, and now they're doing that with just another part of the phone. I'm really excited. I think that PayPal is going to see massive success here. Roy, you got some pushback on that online. What were some of the critiques that people said?
I mean, there's the usual stuff where it's like nobody uses PayPal, and it's like, well, 25% of all e-commerce on digital transactions. There's a lot of nobodies, and I am one of many.
400 million nobodies.
But beyond that, a lot of people thought, well, so some of the reaction was overboard, and so I let me throw this up here. And even with analysts, but you can just imagine if analysts are saying this. So Apple opens up payment options, boosting PayPal stock. It's a long-term positive, analysts said. And that was one of the more tame analysts that were favorable, and then unlikely to be a game changer for PayPal. And so I think part of the legitimate criticism is if PayPal wasn't really doing anything else, was just kind of stagnant, which is not the case at all. This is not Dan Schulman's company anymore. It's moved in an incredibly positive direction. But if they had been, and they were just waiting for this to open up, it wouldn't be enough. It moves the needle a little bit, but not much. Now, one of the things that I looked at, this is a payments article that I opened up, and it was a discussion on the wallets, which basically you integrate with the NFC chip now. Even before this, there was a study that was done that indicated that they would overtake debit card transactions in North America by 2027, up to 31% of all transactions. So, I mean, this is not just a thing for PayPal. I guess that's another legitimate pushback is, yeah, there's other people too, Block exists, and hey, you can even put your Visa on there, I'm sure, within your wallet. So, overall, it's a net positive. The biggest thing that I thought was interesting is that a big part of the remaining bear case against PayPal was that the competition was killing this company. And this week, between what Adyen said in their earnings and then this event here, it's like the bear case keeps on getting weaker and weaker and weaker. And of course, PayPal is now above the 100-day moving average. It closed above 67 for the first time in a long time. It's been like a year.
Wait, what's PayPal at right now?
67 something.
Really?
Mm-hmm.
Wow.
Yeah, I think
almost 68, 67.96.
Okay.
Yeah.
Cool.
The narrative shifting. I think that people are not looking at Alex Chriss as just another nameless CEO. I think that they're potentially seeing that there could be a turnaround play but it's still risky that this is just a legacy company that might grow as fast as they can get rid of shares. Who knows?
It'd be risky at 90. Even here at just a little under 70, it's not. I mean, it could be an opportunity cost. It could go back down a little bit. It could trade in a range. I just don't think it's that risky. So not with what they've been cooking up, and not with what they're currently doing. And they launched Fastlane. Of course, it's one of the most boring webinars ever, but that's not like their main event. They have Developer Day coming up. So
that's a really big deal. I find the Fastlane, talk about pricing to value. If they can charge an additional fee for that service, the only way you get away with that is if it's bringing in real conversions, right? So yeah, very, very excited.
And if it does, if it's even not quite as good, but close to what Alex, Chris, and PayPal and others have said about the product so far, it is best in class. Shopify has something similar. There's a couple other companies out there too that are working on guest checkout, but with how widespread PayPal is, and that it's platform agnostic, that you can use it on the small business PayPal Complete Payments, or you can use it with Braintree, that large enterprise white label payment system. It's a really, really good product. They're launching it just in time, basically for the holidays. They're helping with integration, and they're making it free. So a merchant loses absolutely nothing by trying this out. They're going to launch advertising next year, doing the same sort of model where they are not charging unless they actually have conversions. A little bit different, but and it just, there's not any risk for merchants. Why don't they try it? So I will be very surprised if this product flops. It could, but I'll be very surprised.
Tevis, do you have a position in PayPal or no?
Yeah, I think I have something small in PayPal. Let me check.
All right.
I think so. I'm pretty sure I do. But like super small. Let me see. Hold on.
While you're doing that, I just brought up an image of how big digital wallets are as a percentage of total spend, both in e-commerce and in point of sale or offline.
All right. You ready for this? PayPal is 0.66% of all of my portfolios combined. So there you go.
There you go.
Yeah, it's near 1%. So that was, I think that PayPal, if I didn't choose Palantir for that friend portfolio, it would have been PayPal. I really think that Alex Chris is a very good CEO.
Honestly, I thought you would have picked Hood.
No, because you're talking about 5-year horizon. Hood is killing it right now, but that credit card product, it really gives me some pause and concern. I think had they not launched that, or had they launched it differently, I probably would keep a small position just long term, but I'm going to exit still by January, unless something really crazy happens between now and then, which it could. They're killing it, and it's a well-run company. And again, 40% growth, and then coming out for quarter 3, something like 47-48% growth is what I'm looking at. And it could be higher, it could be a little bit lower, but it's insane. But it comes with that element of risk where I don't know that Vlad fully appreciates what they're doing with the credit card, as far as, we saw the impact as SoFi investors and the drag that it had, and they were more cautious. They were not giving out 3%. It's an incredible product for consumers, but investors, I don't know. So this year, there's not really any risk. Next year is when that starts ramping up and the market's forward looking. So if they see, a whole lot of charge-offs and a whole lot of issues, that's going to be a drag. So
could be a compounder though, if it does well. Also
could be a phenomenal compounder. And this is, Robinhood, they're going to be, this is not going to kill the company. It'll just be a drag, I think, at worst. And then they'll have to reduce and take a little bit of egg on their face when they reduce the yield on the cash back. But they're also launching other products on Robinhood Gold. They're diversifying, so they're no longer cyclical with of course, the cash sweeps, the Robinhood Gold subscriptions, credit cards now, and retirement that they're absolutely killing in. So long term, I think it's a very good investment. I just see some choppy waters over the next couple of years, and I could be wrong.
What is what's the profit taking zone for the both of you on PayPal? Like, is it a catalyst specifically, or is it a price, or is it a time frame? Regardless of, if any, like, what is when will you start, selling out?
I mean, it depends. Like, the problem with that answer is it depends on how it got there.
Yeah.
If next quarter, if the Apple stuff goes the way that I think that it could possibly go, and the advertising platforms and all of these things, which I think are so much bigger than the market's giving it credit for, would I want to get out at 100 if it starts to look more like a longer term play? I don't know, but I whenever I got into PayPal, I didn't want to be in PayPal forever. I still don't feel that way, but I'm happy to change my mind if PayPal starts to truly reaccelerate growth. And I think that there's one of the biggest problems with retail, and like what I think Steven is one of the greatest investors for, is he never looks at something and just discounts it immediately, saying, oh, it's PayPal, it can't go back that way. Every investment that I tell him to look into, he goes in with a fair mind. So if I'm trying to be objective and say, hey, could PayPal turn around their brand? It's possible, and I got to monitor that on a quarterly basis. So I can't really give you a price because things will change over time.
That was like so many freaking words for.
I got ADHD. I have a lot of words in my head. I want to say them.
Well, I'll make it be a little bit less wordy, more direct. So I have mostly shares. I have a couple of leaps as the stock, and I do that intentionally with these positions, just so as it starts running up, when that leap hits 100%, I'll sell generally, not always half, but I'll take maybe a third off the table or 25%, and I'll sell incrementally as I go up, and eventually I'll just have only shares. Is there a risk of that? Sure. I mean, like the leaps I bought back in last April, I sold them, a quarter or two ago, but they lost a lot of money. But I have mostly shares again. So as far as my stocks that I'm holding in PayPal, it does depend on how fast it gets there and why. If it went from this $68 to 120 in the next month, and I mean, Fastlane's doing all right, but there's nothing like groundbreaking. Yeah, I would take a bunch off the table. Even though I don't think 120 is an unfair price for not Palantir, PayPal. Palantir, yeah, that'd be pretty unfair, but I'd like it. Give me that. But as far as long term, I really think that within the next 5 years, this will probably be a pretty easy 3x with what Alex Chris is cooking up. Is that like the most amazing returns ever? No, but it's really good. And the thing is, with investing, you don't have to hit an Nvidia or a Palantir or a Tesla every single time. You'll hit with those every once in a while, but you can, if this is a game of baseball, you can hit singles and doubles and bunt somebody over, and those are all productive ways to advance your position. And so this, to me, has a lot less risk built in with what Alex Chris is doing. I feel like it's in very strong, capable hands. I think SoFi over 5 years probably outperforms it. But I also think that there's a path. It'll take longer than 5 years, a realistic path that PayPal gets to all-time highs again. It's easier now too because the market cap is smaller, but it'll take a lot of execution. But the good thing is the guy that is in charge, he executes well. So I'm going to give him time. I'll be patient unless we have something really weird happen where it's like, hey, it just went to like 150 in 2 days. So well, I'm gone. Thank you, PayPal.
Yeah, I think the early buyers of, and I'm sure there were people that were thinking about this, but like whenever I was buying Tesla, I was buying them because I thought that they had the best car on the market. I wasn't buying them because I thought that robotaxi was going to replace transportation, and then robots were going to be right behind that. I think it's hard to imagine PayPal as being something more than that, or really any investment. But if you do shop for those 2Xs or just, good compounders, they can turn into those amazing positions. And I don't think that people can accurately assume which positions they have that will kind of go supersonic. That's why I like to diversify.
Yeah, and we've seen that with Robinhood. That I was very excited last April and May when very few were excited about it, and I'm like, hey, this looks like a steal to me. And as time was going on, it just seemed like the bull case was getting stronger, even though it wasn't doing anything. December last year is like, base case, I think it hits 26 this next year. It's outperformed where I expected it would be so far. I thought we'd hit that relatively late in the year. And I think there's a chance that it smashes through that. It depends on macro, but we're at $20. So it was at like 24 at some point. I've taken a lot of profit off the table just because it's only leaps. I have only leaps in Robinhood. I normally don't do that, but that was just what I was comfortable with. I even bought some more, even though I'm getting out in January. Probably stupid, but it's like $1,500 or something like that, $2,000. So not a huge deal, but and those are up pretty good, by the way. But the company itself has gone from where I thought it was just purely cyclical and a trade only to there's a real legitimate and strong long-term thesis here. There's some choppy waters, but like they are executing so amazingly well. And you can enter a position, and kind of be cautious and say, well, what if not everything's perfect? What's reasonable? And that's what that base case is really about. That's your base case is not a 3x in 5 years for PayPal. It's probably a double, which is not the best. There's an opportunity cost there, but that's what's realistic to me. But I think a 3x could be more all-time highs at some point. So, yeah.
Do you think other positions that might be on the opposite side of the valuation spectrum also see similar returns? And I'll give you an example to help buff that out. Do you think Nubank, being a more expensive, fast-growing stock, can also 3x over the next 5 years?
Yeah. Yeah, the PEG indicates it's still under 1. I don't know about today, but that
it's under 1. I think it's like 0.7.
Okay, yeah. It's still a good buy. There's geopolitical risk. And these international companies tend to, even when they're owned by Warren Buffett, trade at a bit of a discount anyway. So you got to keep that in mind. But yeah, execution is amazing. How they're able to handle risk is amazing. The products that they're launching, really, really good. What they're doing in Mexico and especially in Brazil, phenomenal. And they have a huge, huge TAM. Tanner, you mentioned when we talked yesterday, and I had not considered this, Nubank can, of course, expand into the United States at some point, and it can also expand over into Africa, which are that is a whole continent where there's some pockets where banks are pretty decent, but Africa, it's struggled in a lot of places with banking and a lot of geopolitical risk. But I mean, Nubank, yeah, it can absolutely 5x in 5 years or 3x in 5 years.
Honestly, like this might be a controversial take, but I think it might be even easier for Nubank to 3x over PayPal because they have the momentum going for them from a stock perspective, whereas PayPal has to overcome that perception of this turnaround. And, people who buy PayPal buy it on the basis of valuation, whereas people who buy Nubank buy it on the basis of growth and the future prospects that it has. So I think that's a powerful narrative in this company. And there's a lot to be proven out for Nubank, and they're proving it. And I think that momentum still has a long way to go if they can keep executing. So it might almost be easier for Nubank to climb to those probably, overvalued from traditional value metrics perspective by that point, because for PayPal, people are buying it for a different reason. They're not buying it for like the 3x and dip. They're buying it for the fact that, this metric is telling me it's undervalued.
Yeah, I'm going to push back on that. Over shorter term and over a year, I would say yes, absolutely. Momentum is big. Over 5 years, it doesn't mean a lot because you can gain it or you can lose it over 5 years. We've seen that with Meta. We've seen that with Tesla. We've seen, SoFi struggling right now. I think that we'll see that over the next 5 years where it shifts and all of a sudden people are like, SoFi's at $20 and they're like, this is undervalued and it's amazing. and these are the same people that said it was going to go to $3. Palantir, we've seen that. Robinhood, we've seen that. Like, it just, momentum could change as they execute. PayPal is probably a good year away from like really seeing a lot of strong positive momentum. But yeah, over 5 years, especially given the geopolitical risk with Nubank, like Brazil could have a civil war, Mexico could have a civil war, and that's going to hurt them pretty badly. There's still a need for banks even in that situation, but that's not good.
I mean, the U.S. could have a civil war just as easily, probably more likely.
Yeah, I think the difference, like any international business carries more risk, not just because, I mean, there could be geopolitical risk here versus there, but you also have to factor in like currency, the currency conversion and the timing on that is also another factor where you don't have to worry about that for US businesses unless they're extremely international and they're bringing in a lot of foreign income. But yeah, it's just another thing to factor on into the Nubank case of like, yeah, there are additional risks for buying outside of the US. I think some of the chat that bashes Nubank or says, oh, this is why I like SoFi in these areas. I am diving really deep into Nubank right now. And I honestly think like people just have no clue the market that Nubank is operating in versus the competition that they have. It's like a free and open market. It's a massive blue ocean.
Yeah, I mean, Mercado Libre launched product in Mexico to compete with Nubank a bit, and so there's some okay competition. Like Mercado Libre is great. Don't get me wrong. This is outside of their competency, but yeah, you're absolutely right that there's nothing really out there that resembles competition.
So what I mean by competition, I don't mean that there's no competition. What I mean is 50% of the population in Mexico is completely unbanked.
Yeah.
Okay. 12% of the people in Mexico have a credit card. Now, that doesn't mean that there hasn't been a larger percentage of people that have wanted credit cards, but they get declined, right? The problem with these legacy banks is that they have such high costs to serve that the small dollar accounts in Brazil and Mexico are not even affordable for the banks to sign them on as users. Okay, it costs more for them to sign up a new user than it would, like from the amount of money that they're going to bring on from a friggin' $20 deposit. So that's the difference. Nubank is walking in with such low cost to serve, real modern tech stack, and is just obliterating this market. The tailwinds behind them are like, I've never seen anything like it. Anything. This will be such a large business. And it's funny, you go, okay, well, can this company be bigger than JP Morgan? And everyone goes, no way, this cannot be the biggest bank in the world. But then like you hear Roy say, well, maybe it could 5x in 5 years. Well, that's getting awfully freaking close to JP Morgan size.
Well, they're not going to stay flat over the next 5 years, dude.
Yeah, but how fast do you think they're going to grow?
Probably a double.
JP Morgan's going to double in 5 years?
Yeah.
I'll see their average return over the last little bit, but I'd be hard pressed to see that.
Dude, if you had this like efficient market hypothesis where like stocks trade at a fixed multiple of their growth rate, you would have a very different market today. The fact of the matter is that like, can the JP Morgan stock double in 5 years? Absolutely. Is it justified by the JP Morgan growth rate? Probably not.
I'm not saying that it can't double. I'm saying what do I think is probable? So I would never predict a stock price over a year, but over a longer period of time, I would assume that they would trade somewhere near an average valuation. Like, they can't keep getting a higher stock price than the price that they're trading at, because then it's going to lead to really ballooned valuations. So they have to get contracted back to some sort of norm.
So I think part of the impetus for that growth is just what the U.S. economy will be doing over the 5 years. I think it continues to accelerate. A lot of that's through AI and optimization. There's problems, but
not only that, but even the money printing alone is going to balloon how much goes into the stock market, and like over time, the historical like PE for the market is going to go up. Like you can't use the same valuation tools that Buffett or Graham used way back in the day, because there's just more money being printed and pumped into asset classes that, like, in 5 years, you're going to have like a 50+ trillion deficit. It's adding a trillion every 100 days. So like it's easily going to be 50+ trillion. So a lot of that money that's going to be printed is going to be pumped into assets, and like that's going to drive the stock prices up.
Yeah, I just think it's going to be driven more into Nubank's pockets than others.
Possibly.
Like the rate at which Nubank is compounding is insane, guys. It's nuts. Like we talk about all these benefits that SoFi sees from bringing on new users and then cross-selling them into new products for free and getting them into direct deposit. And like everything that Nubank is doing is at a 10x scale of that, at a very large total addressable market, growing extremely fast at lower cost to serve. Like one thing that I think is to Nubank's advantage and will be for the next 10 years is America, while having an amazingly high GDP, is so competitive, right? For SoFi to win a direct deposit user, they have to pay you $300 and big sign-up bonuses or other sign-up bonuses like referrals from a friend to get you onto the platform to begin with. SoFi Plus benefits, double the reward points, 2.2% or 3.3% on credit cards. Robinhood has to give you 3% cash back. All of these things. How much is Nubank's cashback card? Do you guys know? They don't have one. That's the truth. Well, they do for really high-end users. Their ultra-high net worth users get a 1% cashback card.
So
there's no direct deposit reward.
At the end of the day, the more lucrative the market potential, the more competition it's going to introduce into that market. The US is hyper competitive because the rewards justify the competition. In Latin America, you don't have that much competition, but the moment you see new eating up market share, you're going to spring new competitors like hotcakes every other year.
They're doing it every day. There's a new bank competitor.
Some of those are going to stick.
Sure. I think that the problem is that, well, this is twofold. So one, whenever it comes to the business that they're in, it's so commoditized. Like lending is something that is understood and anyone can do it. The thing that separates them is their underwriting. And to do better underwriting, you need lots of data. Well, how is anyone going to compete with Nubank there? They've got a relationship with 56% of the adult population in Brazil. No one's going to be able to catch up.
So if Nubank is so good, and I agree, it's really good. That's why I bought. Why are you not buying at 14?
Well, one, I have a sizable position already, and I like to diversify. But I mean, there are risks. Like I don't like to go all in on positions that I think are extremely exciting as well. Things can go bad for Nubank. I just think that they have an extremely strong, advantage right now. Does that make sense?
Yeah, no, it does. I mean, it's similar to why people were asking why I wasn't buying Palantir at certain valuations. It's like 70 something percent of my portfolio. So yeah, it's at some point, like, unless I just want to kind of go all in, which it would have been the thing, I would be making out like a bandit right now, but I didn't want to. And you have to say, okay, the sizing of my position is where I'm comfortable with. Things can change, and later down the road, it might be trading at 17. You're like, hey, it's still at 17 a year from now, and it probably will be. I'm going to add some more. Nothing wrong with doing that.
Yeah, I got some people in the chat that disagree. I counter me with reasons on why Nubank is potentially not a strong pick, please. I want to know, but just saying that I'm out of my mind is not going to be a like a good argument.
People act so tough in the comment sections, and it's like so easy to like YOLO your entire portfolio into a single position when you're playing with like 10 grand or 20 grand. But the moment you start playing with like larger numbers, you'd have to be a fucking idiot to like put your entire portfolio, because yeah, you could be a millionaire overnight, but you could also just lose all the money that you've spent years accumulating. And so it's like you have to diversify after a certain point, because otherwise it's going to be some ridiculous risk tolerance that you need. It's just reckless.
Shane said, I guess I qualify as an idiot. No, it can work out for you. I just, that's my margin of safety, is playing it a little bit safer in certain investments.
And fair enough. Like I held off a new bank for a while just because I'm like, hey, Latin America has some pretty big issues. Brazil, like I was reading a lot of geopolitical stuff, and it's hot mess isn't probably the best way to describe it, but there's some big issues there that are not present, as imperfect as the United States and Canada are, that are present in Brazil and are present in Mexico. And so I have to appreciate that. But at the same time, I really see the growth vector of Latin America as being particularly strong. We shared this the other night, but there's two companies there. It's the JP Morgan Chase of Latin America, which is Nubank, and there's the Amazon of Latin America, which is Mercado Libre. And so I wanted to invest in at least one of those. It's my only position that's international. I don't feel comfortable, just because of geopolitical stuff, investing in, well, and some other factors too, investing in China. India is just hard for me to understand. I've been there. I have Indian friends, but it's like Latin America, I can understand. Nubank, I can understand. Mercado Libre, I can understand. And so that's my level of comfort. Now, if somebody in the comments is like, yeah, it looks good, I'm just not comfortable investing outside the United States, historically and usually, like, that's the right thing to do, is just stay in the United States. Don't invest in these garbage countries as far as like regulation and government stuff like Canada, because you'll just get wrecked, other than Shopify.
I mean, on an individual company level, maybe that's true, but emerging markets have done well in certain areas. Like there is opportunities outside of the US to see growth, because you're betting on smaller geographies that are growing faster.
That is true. And that's where, if I wasn't investing in Latin America, I would have done, I think it's the Nifty 50 in India. I was interested in that index. I'm like, hey, looks good. Don't know what half of these companies do, more than half actually, but hey, it's growing. So
the one thing that I like about LATAM is it's not that far away. Like I find that it's hard for me to even envision how life is like in areas that are too far away, where Brazil, Mexico, Colombia, there's definitely a disconnect from the lifestyle that I live here, but it's more so related, right? I can envision it. So I'm going to start creating way more Nubank content, and maybe I got a little fueled because people were talking about how bad it was recently, and I was like, guys, you have no clue. People have no clue what they're talking about in terms of this company. This is going to be a really cool company if everything works out.
And it might not, but
it might not. Well, that's why I'm not going all in. Yeah. But yeah, I keep increasing my price targets on this company, and we'll have to see the rest of the year how things pan out. And it's seemingly like Mexico is going to be a bigger opportunity for them than Brazil, and all while they continue to make more investments with their current clients that they have. People have to remember, this is an 11-year-old business. They're younger than SoFi. They launched their product first in 2014, and they have over 100 million users. It's a marvel of success that has not been replicated in other industries. Like aside from some AI startups like ChatGPT, it's hard to find 100 million users. Tevis?
No, I was surprised because when you said 11-year-old business, I was like, they were founded in 2009, and then you said 2014. I was like, whoa, what year is it?
Yeah. No. So they were founded in 2013. They launched their first product in 2014. They were in a beta and just like working behind the scenes for the first couple months.
Look, man, I think you should start new weekly. And I'm serious. Like, you're arguably the biggest content creator that consistently talks about new. You've sort of launched that as an entire vertical of conversation. And now you're seeing the rewards with the stock hitting all-time highs. You know, get your favorite other new content creators and carve out your own niche, man.
You guys are my favorite new content creators.
I don't own it. So when I'm in it, then, you know, I'll be a part of it. But
it costs you $14 to get in.
Partial shares, even less.
There you go. There you go. I don't think you have owning rights there or voting rights, but
and it's my smallest position by far. Yeah, other than Bitcoin miners, like it's a bit over 1%. So it is larger than Tevis's PayPal allocation, but
yeah, I mean, I might not even be holding PayPal, and like I think for me, PayPal, the moment it gets to a double up, like I'm out. You know,
that's fair.
No,
I'll probably just get the same amount of shit that I did for Palantir, but like Palantir was a double up, I'm out. You know, and
I'm gonna get a lot of flack when I announce whatever month that is. Probably January. It's like, all right, thank you, Robinhood. It's been quite a ride. Maybe see you in the future.
You know, so yeah, I think I'm really excited for this like friends portfolio thing because it's exciting stocks that have small market caps that have a high potential to compound, and it's just more fun stuff to talk about.
Small market caps. I offered you Nvidia.
Well, not yours, but like Hims and Duolingo and Rocket Lab and, you know, all of these other ones. So it's gonna be fun. I want to do it probably, I don't know, within the next 2 weeks or so.
It's important to know Shakira uses new. So, all right. Do you guys want to move on to the after hours?
Let's do it.
All right, ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. If you want to join and support the channels of either myself or Tevis, click the little join button down below. You have to be subscribed to hit that join button. But yeah, thank you all so much for watching. Really do appreciate your time. Bye for now.